Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome to the Monday section of Wealth Matters podcast. As you guys know, I have been focusing a lot on cryptos lately on my Monday section because I think the world is moving towards crypto. Of course, my majority of my holdings are still in real estate. I believe that everyone needs to have at least 5% of their portfolio in crypto, but make sure that 5% you don't need it right away because cryptos are volatile, and look at long term for that 5%. My crypto portfolio has been growing at steadily pace. I still have about close to 50% in real estate, and then I'm close to 15 or maybe a little over 15 to close to 20 actually in crypto now. I don't recommend someone doing that, but this is just to give you guys an idea on where I am and why I'm okay to take that risk. If you have not subscribed to my podcast on Apple or Google or Spotify, please do so right now. If you are watching me on YouTube, please subscribe and like this video. Also, please share this channel and video with your friends because sharing is caring. So let's get started. I want to talk about, because we have been mining Bitcoin in our Fund 1, Fund 2, and we just launched our Fund 3 as well. And a lot of people are asking me why Bitcoin mining is better than buying and holding. So I want to focus on that. Mining means you are producing money, right? Bitcoin is tied to US dollar or euro or howsoever. It's a currency, right? A cryptocurrency. Can you actually print US dollar, euro, or British pound at home? No, right? But if I tell you that you can print Bitcoin at home, you'll be like, how is this legal? Because that's how it works. So if you want to know more about what Bitcoin mining is, I'll put the link in the show notes to my earlier podcast episode where I spoke about what it is, right? A true story, a couple of kids, siblings who live in Texas, and they started mining on their own. I think they are 14 years and 9 years old, and they were making, in 6 months, they started making more than $30,000 per month just by mining Bitcoin, or Ethereum. Why I started focusing on Bitcoin, because I want to focus on the top 5 assets, right? And then after looking at it, I love Bitcoin and Ethereum. Ethereum, though, is moving to proof of stake or planning to move to proof of stake most probably next year, 2022. I don't want to buy a machine and then I can't mine Bitcoin, or I'll have to mine some other coins which are on that algorithm. Bitcoin and Ethereum are on different algorithms. Bitcoin is on SHA-256. So that's why we focused on mining Bitcoin. Now, why mining is better? So just give you guys an idea, without getting into the weeds, miners provide, or the machines provide, the computing power necessary to run the Bitcoin blockchain. They actually solve complex puzzles or equations to verify transactions because it's blockchain and keep the network running, right? So the incentive for devoting their time, processing power, electricity, etc., is the regular Bitcoin reward. The reward for mining a new block on the Bitcoin network is currently 6.25 BTC. And with Bitcoin trading today at 67,000, that amounts to close to 400,000. Reward goes down by 50% roughly every 4 years, with the next halving set to occur in 2024. So I think we are recording this in 2021. We still have another 3 years. So I think it's still a great time to get into Bitcoin mining. And I'll also talk about, you should try to do it at home, but I count it as a hobby. It's better to do it at a larger scale or with someone who already knows how to do this. Also, the reward rate continues to reduce over time. The way Bitcoin's code is written, it would only be limited to 21 million, right? Total Bitcoin. But we won't see the final Bitcoin mined until sometime in the year 2140. I'm not saying 2040, it's 2140, right? So in about 5 years, the rewards will reduce a lot. Of course, if the rewards reduce, but miners continue to provide their processing power, I'm pretty sure in 5 years, the Bitcoin would be at least, if not, some people are saying 500,000, but if not, I'm looking at about 250,000 or at least 200,000, right? So This is why I think mining still has a lot of opportunity. And the way China banned Bitcoin mining, it created huge opportunity for people all around the world, especially people in US, because US now accounts for 35% of the global hash rate. What I mean by that, 35% of the mining Bitcoin processing power comes from US, right? So there we have become the biggest beneficiary. And now why mining your own crypto bits, buying and holding? Buying and holding is great. I also tell people do dollar cost averaging, DCA, and continue to buy cryptos, right? But when you mine it, now you are not actually buying the crypto or Bitcoin. You have here what I call a downside protection, because your cost of buying that particular Bitcoin would be much, much lower than buying it on the market. The way we do it, our total cost, including the machine cost and the utility cost, our cost of mining one Bitcoin is around $18,000 instead of buying it on the market for 60, 65, and today it hits 68,000 as well, right? So as you can see, it's huge difference for us when we mine Bitcoin, right? And this is very important to understand. And actually, I'm going to share my screen and share a graphic. That's a pretty interesting graphic. And of course, it's not mine. I just found it on internet. See, mine plus hold BTC is the red line. As you can tell, as soon as you start bidding, buying and hold, right? And this is, we are looking at the past, right? So if you have started in December 2017, you would be breaking even in March 2019, right? Whereas you were below that even till in March 2019. If you have bought and hold, December 2017 was when Bitcoin, and I remember that because we were mining other cryptocurrencies that time, Bitcoin had hit close to 20,000, and then it again hit 20,000 in December of 2020. So you had to wait 3 years to get to zero, right? Whereas if you were just mining, you were already up by September, not September, you were at 0% about March 2019, and you were already up in June 2019. But you see the difference, what happened in March of 2021, the returns became astronomical. And now comparing it to coming December 2021, the Bitcoin which you bought in 2017 for 20,000 would be worth maybe let's say 80,000. Your gains are 400%. But if you would have mined the same Bitcoin using the same amount of money, your gains would be close to 2,000%. So that's huge difference. And this is what I'm talking about, that it's so important to understand how mining differs from buying and hold. So that is one of the graphic. The other thing, the graphic I want to share is also pretty interesting, and that shows how, if you consider the amount of money invested, right? So let's say you invest $10,000 in buying or mining Bitcoin. In 5 years, if there is no price change, and that's exactly what happened between December 2017 and December 2020, no price change, it actually dropped, then your Bitcoin is $10,000. But whereas your mined Bitcoin, it's worth 29,000, because that's the amount of Bitcoin you can mine using one machine in 5 years, right? One machine costs about $10,000. If you see, if Bitcoin hits 100K, then worth 17,000, and your $10,000 investment, but if you had mined that same, then it would be 48,000, right? The same way, if your Bitcoin hits 500K, your $10,000 investment is only 83,000, but whereas your $10,000 investment in mining equipment and mining it would be worth 239,000. So as you can tell, it gives you 3x return overall comparing to buying and hold. As I said, I'm not against buying and hold. I also do it myself, but I also mine. So these are a couple of important graphics I wanted to share. If you're listening to me on Apple Podcasts or any other audio podcast platform, you may not be able to see, but you should be able to actually ping me, and I'll be able to share those graphics as well. So another important thing people do not realize, so that's one thing, it's actually mining, right? The second is the tax benefits, because you are buying a machine and then you are using it for business, right? So now this is where I compare the crypto mining or Bitcoin mining to real estate, because I get the cash flow as well as tax benefits, right? So in first year itself, you can write off 90% or more of your machine cost or the total cost of putting all this together. So this is like actually real estate on steroids, because you get much faster return, plus you get tax benefits. And so I do it for both. I want the tax benefits as well as I want to get cryptos at a discount, especially Bitcoin. So I hope this video or the podcast answers your questions. A lot of people have been asking that why mining is different, how mining is different from buying and holding, and why mining is better than buy and hold. Thank you so much for watching. Let me know what you think of this video, and have fun investing.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!